Welcome back, ladies and gentlemen, ghouls and goblins. Happy Halloween. Happy spoopy season. Hope you're having a great day, and thank you for stopping by to join me on my daily trade reviewsies. We see Beyond Meat the other day. I'm not a big bean man myself, but off of 52-week lows, and that's the big thing here, right? I don't know if you're familiar with seller boxing. But I think this is a good example of that, possibly in progress. Whether or not this company is able to turn around long term is yet to be seen. And I'm rooting for it. But at the same time, this near 60% sell off this morning lets me know that things are not looking too hot. However, this is on the back of like 1,000% run plus, right? So from 50 cents up to $8 and almost $9. It is a crazy ass run. It's as simple as that. If you weren't involved within this on the bottom, we called this right off the bottom on day one. And even then I said, you know what, I don't really like this, but if you do have to play it, we've got these two gaps on the 1 day, try to get in and then break through the consequent encroachment, then test the upper band. And then, if you get that second one, that's amazing. What I did not expect is the expansion above them, which has been really, really aggressive. So if anyone was in this, congratulations. Make sure to take your profits. And this is a good example as to what happens after an extended run is a lot of profit taking because of this, right? A lot of green up here. So people are going to be backing out of that, scaling down their risk, right? Confirming some profits. So that's not great. And, to kind of talk about seller boxing here. So it's not the first time this company squeezed up to the 200 and tried to break above it. But what we noticed is each time it does do that, it goes down further and 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 down further until there's nothing left. And now this is seller boxing. Now this is why things are dangerous, and you really want to be involved in the front end of it. And if you're not, do not participate. Like, don't be buying this anymore. You should have been buying it 3 days ago when we first talked about it. And now, explaining this, right? Massive pop drops harder than it did before. Massive pop harder than it did before. So on and so forth. A repeatable process, right? Do you think this time is going to be any different? And just because it's at 50 cents, it can't go that much lower. Yeah, it can. They can do a reverse split, jack the price up with a 20-to-1 back to $10 and repeat the process another 5 times where, they're covering their short position, right? So you see, the volume hit. And then a couple days later, they pump it to mainstream media. It was literally on the news yesterday, saying, it's the next GameStop, right? Sure. You do that, but the short interest is quite high, 60%. So that is in itself its own, but there's a reason it's high. It's because it's a trash company, and it probably won't exist in 10 years. Like all of them, unless there is a fundamental change in direction within the company. Of course, we'll keep an eye out, right? We like to stay on the pulse of things. So what I mean to say by all of this is this doesn't signify, a total turnaround from here. Maybe it does. They did have the debt restructuring, but time needs to, unfold more, because more likely than not, we have continued seller boxing where they relieve the pressure. We get this massive run. They do a mainstream pump. Everybody starts buying it on the social media platforms, at which point they've inversed again, where they're making new short positions up here, right? Where the price is now inflated in comparison to where they know it needs to be. And that's exactly what they did here, and how they were able to push it down further, so on and so forth. And it's not just this company. It's all of these companies. It's systematic, and, just protect yourself, right? With that being said, maybe it is a real reversal and there is something palpable here. Let's see if we can hold the 200, right? Let's just mark this out for ourselves. As a point of separation is, if we can hold this line base above it, then maybe, we can expand up further and, maybe like there's a lot of room on this potentially, like, $10 seems likely for sure. And, maybe, like, is there even another gap up here maybe? No. But nonetheless, I don't even want to chart that out. It's one thing to hit it from the bottoms, 52-week low, and you see that fresh volume hit, and then you chart the gaps out, and you have some price targets, and you scale out, and oh wow, I got lucky, it actually broke above. But to be entering here, I think that is absolutely absurd, considering the history of the stock. So with that being said, if we can base above this line, maybe it looks good. This could be, not that I would be entering anymore, but if you did need to enter, if you couldn't help yourself as a FOMO sapien, try to enter as close to the 200 with a stop below, I guess, and that's your risk. And you have to set that risk somewhere. And when a stock is up from 50 cents to $4, it's like, how do you manage that risk? You got to keep it really tight. Just so if it does turn back on you, you do protect your account as a whole. So high short interest plays, that's going to be the theme. So, what did we have last time? It was open. It was Dunkin' Donuts, Krispy Kreme, the DNUT, right? And GoPro was another one that ran. So, getting in on that theme. And, we see that pick up last night. And then this morning we have continuation. There is we're entering here. There's a market structure shift here, but we enter in above it. Because I hate to play on the right side of an apex. I always want to be playing on the left side where it's continuing its ascent. So we wait for a break of this, and there's our entries and our stop losses below the recent swing low here. You got to set that risk, and by doing that, it gives us our roadmap as to where we can scale out. At our 1-to-1, at our 2-to-1, we do not get a 3-to-1. All right, so I can get out of that, and it breaks down, right? So again, these short interest plays are not like a news play, right? So we see, the other day I got this down here, GSIT. We had a really nice run the other day, right, on this news of the efficiency of their semiconductors that can replicate GPU level AI performance, okay? So boom, killing it, right? And then, it kind of runs more, but we do get our sell-off, right? Because it's still a massive run, but it is, there's a catalyst here. There's something that drives growth. It's not just a volume anomaly, which is what those short interest plays are, because it's the shorts covering, then the mainstream media pump, and the new shorts on, and it's just a whole thing that has nothing to do with anything other than volume, where this has a reason for the volume to be there other than just manipulation, with a catalyst that is relevant in the industry and will have multiple parties interested in it, right? So kind of more interested in this as a recovery. We talked about yesterday how you could maybe enter somewhere near this gap with a stop loss below it. Here this morning we have a reversal back through the gap, and then that support above it. Ooh-wee. So, let's see how this unfolds in the coming days. It's still very fresh play. Maybe we get some consolidation, and we're going to keep an eye on it for some volume, right? So maybe the difference between a Krispy Kreme or a DNUT, whatever it is, or a GoPro, and a regular company, I guess, something that doesn't have that really high short interest. They move for different reasons, right? And you should treat them as such. And the risk here needs to be managed in a much more aggressive fashion, because it's easy come, easy go. For example, if you get a retracement on a company that had big news, oh no, my position's red, but it'll go green in the coming days because I know that this is a good play long term. In contrast to, again, these short interest plays that are just skyrocket and like slam back down even harder. So DNUT was a nice play. We make a scalp. It is what it is. Gotta feed the fish, right? But we also have GoPro is another one, and that's kind of chilling. Now, this didn't really get much love last night. Not really much this morning. And even, not a lot in regular trading hours here. The volume is very poor, but you can tell that people are interested in it when typically it doesn't trade at all. And then like some lesser quality short interest plays, YYAI, kind of, getting some nice movement there from 7 cents up to 23 cents. But, penny stocks, I'm not interested at all in this. And, again, there's a reason that these companies are worthless. And it's one thing to take a worthless company that still has, a decent market cap because it's got a legacy business behind it. Krispy Kreme, GoPro, they sell things, they do stuff, but some of these companies don't, and they just have short interest because they're irrelevant and going out of existence even faster than those businesses that had that legacy platform. So what else? We have RANI. That was the other day. This is like day 3 continuation at this point. Early this morning, but it seems to be really pulling back here as expected. I mean, this is 70% since our re-ads yesterday at the spike this morning. And what do we have? 260 from our original ads. And that's why, much like Beyond Meat, we're getting it early, right? We are monitoring our volume scanners, our news scanners. We're on the pulse, right? And we see it, we get our entries, we set our risk, and we scalp it up. Because there's a lot of people seeing this running this morning. And they're like, oh, wow, I'm gonna enter here after it's already been running for, multiple days. And it's just like, are you insane? Doesn't mean that it won't recover in the coming days, but as far as an entry model, your risk reward is out of whack. And, that's an easy way to, take your account backwards. And then SBEV, I guess we can talk about. This was doing some stuff last night and then, tried to reverse earlier, but no volume. And, that's what we see as a phenomenon, a characteristic of it anyways is, we see these meme plays hit the market, right? And all the social media buzz, and then the mainstream media gets on it, and even your uncle's trading it, right? They're volume black holes. They just suck up all the volume, and nothing else can really get any traction to perform a technical setup. And it's just unfortunate. It is what it is. So that's kind of why we were playing DNUT this morning. BENF was actually probably the best play, and probably would have went parabolic today if not for all the meme stuff. Talking about this, I think a little bit yesterday, the news came out where they're converting shares, right, into common stock. So a low market cap, and it's got the relative volume that we look for, the low daily average, and the influx of current day volume. But again, it's not really doing much because of all the different short interest plays that are up and about, and everybody is looking for the big short squeeze. So because a stock has high short interest, and they've seen a few of them before, they act accordingly, and they don't realize that that short interest is high for a reason. And when the price is already elevated, that short interest is probably increasing as new shorts are being created at the top, right? So we do get a 5-to-1 risk reward here, which is great. We see this doing its thing yesterday after hours, and then breaks down this morning, but it has a VWAP reclaim, and that's our favorite thing. We've got a news, right, runner. We've got catalyst. We got something that fits the profile with the market cap to low daily average. Here's our reversal signal. Here's our key level breakout of VWAP with a trend retest number 1, trend retest number 2. Get our entries. Stop loss is below the reversal, right? Just below the reversal, below the 200, somewhere here, right? You got to set it somewhere. And when I have a reversal with a key level breakout, sometimes I'm not setting it below the swing low, but below the reversal itself, below that key level, if it's not too high, because you do have to give it some room, right? Or else, obviously you can't buy a gazillion shares and specifically on a penny stock, if your stop loss is too tight, you do need to let it breathe a little bit, right? Much easier to set a tighter stop on a more expensive stock, as the order book can support the size of order that you'll need to place. That's a little bit more advanced, I guess, but nonetheless, a really nice play here. And again, I think that this has potential for more, but with the current market conditions being focused on the short interest plays, it's going to be tough to find that traction. And then ELBM, this is, nothing happening here, but so we've seen Beyond Meat have debt restructuring, and high short interest, right? So ELBM comes out today. We got some debt restructuring. So I check out the short interest. Well, it's not as high, but it is there. It's 12%. So eyes on this into the future. I wish it was higher, but it is what it is as far as a potential sympathy to Beyond Meat goes. All right. And then on that note, DNUT had fluff PR. They're like, it's donut day. We're selling donuts. And then GoPro also had fluff PR where they're like, we got a new 360 camera. It's like, you guys got new cameras all day. But it just goes to show you how aware that these, PR individuals are with what's happening in the market. They say Beyond Meat going, they understand that they're in the same category. So they put out a fluff PR to get on the news scanner to gain attention of individuals like myself, as well as the broader market. Man, it's clever. These people are, they're on it. So that's kind of what I have for you today. The S&P 500 is selling off, which is a bit of a bummer. Let's see if we can hold that downtrend that we broke through the other day. Maybe grab it as a support area and bounce above. Doesn't look great. I mean, we'll see. We could bottom and reverse here at any point, though, as the market has generally been quite strong, and we did have that retracement. I mean, let's just go to the 1 hour here and maybe potentially adjust that. Like, what if that isn't it? Well, it kind of is, though. Like 1, 2, 3 confirmations before we break through. I like it. I think that's going to hold. But maybe, no, I mean, that's not a downtrend. What kind of downtrend? That's the healthiest downtrend I've ever seen. I'm not even going to draw that. So we'll just wait and see how it performs. Oh, what is this, chat? What is this? Can anybody tell me what we're looking at here? I see. Do you see? It's a good thing we pull out and look at that one day. This used to be and was a very prominent bearish order block before a nice sell down here. And now we've invalidated that, and we are now retesting it, activating it as a breaker block. So this could be a really nice area to go long on or use as an indicator on, maybe your other, large cap stocks that you're using in your portfolio, whatever it happens to be. It's maybe a nice long position here with a stop below that breaker block. That's good risk reward. That's a nice technical entry. And it wouldn't even be too hard to scalp it up to a 1-to-1. So, always just kind of using the S&P 500A to trade daily options, but let's not talk about that. But I also like to utilize it just as an indicator for my my general portfolio, right? So that's all I have for you today. Thank you for watching. Have a great rest of your trading day, and we'll see you back this afternoon for our GameStop recap, which is pretty juicy as well. We went through the volatility overexposure indicator. We kind of found some more information on that. So looking forward to seeing you all here again a little bit later. Take care.